Well, as promised, let's go across to Peter Guntart, who is the head of Asia Pacific Global Corporate and Investment Banking at BofA Securities. Hi, Peter. Thanks a lot for joining in. And remember, Peter's joining from the sidelines of the BofA Securities 2025 India Conference. Peter, it's been a while since we spoke. Thanks a lot for joining in. Well, let's focus on a couple of aspects then. If you look at the corporate banking views from Asia Pac, the big trend that we're seeing in India is monetization by private investors as well as promoters. Is this an India-specific trend, or do you see this across Asia Pac?
No, look, we see the trend across Asia Pac, although I would say that India, obviously, given how strong the market have performed over the last 3 years, which has been the best performing market in the world, it's normal for private equity who has been investing over a long period of time in India to monetize some of their earlier investments. But I would like to stress that if you look at it from a net flow perspective, all the private equity firms continue to put more money at work in India than they're monetizing. I think for the promoters it's slightly different. Obviously, a lot of them again have been have been holding positions for a very long period of time. So again, some of them, for idiosyncratic reasons, maybe is change in situation, or also the fact that there's a generational change, are looking to take advantage of the very strong market.
All right, Peter, great to have you on the show. Thanks so much for joining in. The other big trend that has been noticed quite a bit here in India, that in these recent block trades, MNCs have been looking to pare down their stakes. And this has happened perhaps from a valuation point of view because they feel that, valuations in India are rich. But you tell us, what do you think the trend is going to be here onwards? Will we keep seeing more sales from MNC promoters as well?
I do think that this trend is likely to continue for two reasons. I think, first of all, the Indian government is encouraging successful multinationals, to list their subsidiaries, so that investors have the ability to invest directly, in the Indian part of the business. And if you're a multinational and say, you're trading at 10, 12 times earnings, as an overall business globally, and your Indian subsidiary trades at 25, 30, sometimes 40 times earnings, from a corporate finance perspective, it does make sense, to monetize. Having said that, I think, overall, multinationals remain extremely bullish about the opportunity in India, and and most of the money that they're raising, is also, or a lot of that is also reinvested in further growth. As everyone thinks that the next decade or more is really, is where India is going to outperform, its global market significantly.
Well, Peter, the other big trend that's been the listing of MNCs in India. We saw Hyundai last year. Is it going to be a big trend that we're going to see a lot of supply of MNC paper here in the Indian markets?
Absolutely. Okay. I think especially companies that have a consumer brand, it makes a lot of sense. So any business that is B2C, I think, and has scale in India, is definitely going to look to list, and I think that's a trend that we see for many, many years to come. So yeah, absolutely, we're working on a number of them, and we believe that this trend is going to here to stay.
Peter, if we can ask you about M&A trends across India and as well as the region, that's the Asia-Pac region. We haven't heard of any large deals in the last couple of quarters as far as outgoing deals are concerned, outbound M&A. The last one perhaps was Adani's buying out Holcim. So what's your take on both inbound as well as outbound deals around India and the region?
Sure. Look, the M&A market, has been slightly slower at the beginning of the year globally than what we would have expected. Because some of that is driven by macroeconomics, by uncertainty. If you're a board and you're making a big decision about selling an asset or buying an asset, and you do not know, what, for example, the tariff situation is, that's, a very tricky decision to make. Having said that, we do believe that we're going to continue to see significant M&A activity. Again, if you look at a multinational, if you don't have scale in India, you may be looking to sell. It's also, I think there's going to be a lot of assets coming out of private equity, which may be interesting, like for people to buy. So we believe that, like in multiple sectors, we're going to continue to see a very robust M&A market, and the dialogue, is definitely very high.
All right, Peter, taking your point forward on the MNCs who don't have large operation and are looking to exit, is that trend going to be seen in something like, say, the cement sector?
Look, I do think that when it comes to to some of these sectors like cement, we obviously had Holcim selling. I think there's question around like what would someone like Heidelberg do? Because I think there's also because you look at like in the energy space, because where a lot of private equity firms have built up large renewable platforms, which could be interesting, which could be interesting investments. So there are clearly these sectors where also I think multinationals have realized that it's pretty hard to compete with the most successful Indian companies in these sectors, and they require continuous investment where it may be the right time for them to monetize.
All right, take that point. Got it. Peter, do you have any insights on private equity exits and investments? When a lot of PEs checked into Indian companies and they've been exiting quite successfully as well. Can we expect more of these exits? And what do they really signify? I mean, what does that tell us about the PE stance on India?
Absolutely. So look, the business model of private equity, is to recycle capital. They invest, they normally maybe hold for 3 to 5 years, and then they return capital to their investors. That's very important, because private equity really works around funds, and normally they invest the fund over 3 to 5 years, then they harvest, they raise the next fund. And at the moment, one of the big trends globally is that investors into private equity, they want to see money returned from their previous investments, as they invest into new funds. The allocation, first of all, the funds that private equity is raising is getting bigger and bigger, and the allocation of the Asia funds, of the private equity firms towards India over the last 5 years has gone maybe from 15 to 20% to that now most private equity firms would say they intend to invest 30 to 35% of their newer, larger funds in India. So if I look at it on a net basis, then the private equity investments in India are only going up at the moment, despite the fact that it may look like from the public market, is that actually, as private equity is monetizing some of their existing holdings in India.
Peter, give us a word on the M&A trends across Asia Pac as well as the globe. Which are the sectors you believe that will still see a lot of M&A transactions happening?
First of all, we see M&A activity picking up across all sectors. We see a lot of activity in Asia. We see a lot of activity from Japan. With the corporate governance reforms. Also, Japan into the US, Japan, is obviously a massive investor, in India as well. So that's clearly a trend that we see. And consolidation, happens really in every single sector. As companies are getting, like the economy of scale, be it in pharma, be it in financials, in most industry, it's definitely something that works well. You spoke about data centers. Look, it's obviously it's one of the big buzzwords for the last, year and a half, has been around, general AI. I think it's hard to predict trends and say what's going to be the next killer app here or there. But one thing that is in common is that the world is continuing to consume more data, which means more data storage. So the activities that we see in the data center space, is very, very high.
All right, understood that point. Peter, the other big space where there are deals happening globally are, for example, the oil and gas segments. Are you expecting to see a lot of transactions here, specifically in oil and gas energy overall?
Look, I think the energy space, is definitely, another area where we believe we're going to continue to see consolidations. The majors, large companies, they have to, renew their portfolios. Look at what they're going to do next. So this whole area of, of portfolio optimization, will continue. The same is true, actually, by the way, for pharma. Because we've seen, a lot of licensing deals in the pharma space happening, for example, between China and the US. US. So, I think both pharma and energy are areas where we expect continued activity, in this year.
Peter, before we let you go, you have been tracking the Asia Pac for a very, very long time. Well, in the last few years, is there any distinctive trend that you've observed in India which you think is going to be, say, a mega trend going forward?
Look, I'm very bullish and continue to be bullish. And I remember, as I did a similar interview a year ago, and I said, India will continue to be one of the best performing markets. I think the mega trends, continue, to work well, for India. And, I think the amount of new companies that we have seen coming and coming to the market, and the innovation that these companies are bringing and the scale, that is something that continues to excite investors in an environment which the geopolitics are hard to predict, but it looks like India is going to continue to be a winner.
All right, on that optimistic note, we'll wind up the conversation. Peter, a pleasure having you on our show today, and we look forward to perhaps connecting more often in the future. Thanks so much.